Hello. In the previous 4 videos, we talked about the steps of the accounting cycle. If you haven't seen them, please do that to understand more. Today, we'll review all steps in a comprehensive example about the accounting cycle. But wait, if you are new to my channel, give me a like, subscribe, and leave a comment. Are you ready? Let's begin. Let's begin with the first 3 steps. Here we have Kawabata begins practice as a dentist and invests $20,000 cash. Here we have 2 accounts, cash and owner capital. And the entry is debit cash, credit owner's capital. And we have to transfer them to the ledger. The second transaction on September 2 purchases dental equipment on account from Green Jacket Co. for $17,000. Here we have an equipment and accounts payable, and the entry is debit equipment, credit accounts payable, and we have to transfer them to the ledger. $17,000 in the debit side of equipment, $17,000 in the credit side of the accounts payable. Pays rent for office space, $700 for the month. Here we have rent expense and cash, and the entry is debit rent expense, credit cash for $700. And we have to transfer them to the ledger in the rent expense in the debit side and in the cash account in the credit side. On September 4, employs a receptionist. Here we don't have a transaction, so no entry. On September 5, purchases dental supplies for cash for $1,000. Here we have supplies and cash, and the entry is debit supplies, credit cash. And we have to transfer them to supplies account and to the cash account. Receives cash of $1,600 advance from patients for services that are expected to be completed by October 10. Here we have cash and unearned service revenue. The entry is debit cash, credit unearned service revenue, and we have to transfer them to the both accounts. Pays office expenses, $400. Here we have office expense in the debit side, cash in the credit side. The entry is debit office expense, credit cash, and we have to transfer them to the both accounts. Bills patients, $5,000 for services performed. Here we have accounts receivable and service revenue, and the entry is debit accounts receivable, credit service revenue, and we will transfer them to the both of accounts. Pays Green Jacket Co. on account $3,600. The entry is debit accounts payable, credit cash, and also we'll transfer them to both of accounts. Withdraws $3,000 cash from the business for personal use. Don't use drawing account. Here we have to decrease an owner's capital account. So the entry is debit owner's capital, credit cash. And the posting looks like this. Receives $1,000 for patients on account. And the entry is debit cash, credit accounts receivable. After finishing all transactions, we want to know all balances for all accounts to make an adjusted trial balance. If we take a cash account, its balance is $30,900. So we will transfer it to the unadjusted trial balance. Also, accounts receivable. The difference between $5,000 and $1,000 is $4,000 as a balance on 30 September. So we will transfer it to the unadjusted trial balance. accounts receivable $4,000. For all accounts, we have to do that. We have cash, accounts receivable, supplies, equipment, accounts payable, unearned service revenue, owner's capital, service revenue, rent expense, and office expense. Let's move to the adjusting entries. But before that, I want to show you the worksheet. This worksheet will help me to make the adjusted trial balance and the balance sheet and the income statement. Here we have to show the adjustments influence on the trial balance. $1,800 salaries and wages for the month of September will be paid on October 1. Here we have salaries and wages payable, and the entry is debit salaries and wages expense, credit salaries and wages payable for $1,800. This entry will influence the trial balance. Here we can see salaries and wages payable on the credit side, $1,800. We don't have any balance before for this account, so it has a new balance in an adjusted trial balance for $1,800 in the credit. Salaries and wages expense also, it has a debit influence and it has a new balance in the adjusted trial balance. After that, we will see salaries and wages payable will transfer to the balance sheet and salaries and wages expense will transfer to the income statement. Dental supplies used during September is $300. Here we have to decrease the supplies as an asset and increase the supplies expense. And the entry is debit supplies expense, credit supplies. We can see here the influence adjustments $300 in the credit for supplies, and its balance was $1,000, and now its balance is $700 in the debit. While supplies expense, it had no balance before the adjustments, so its balance now is $300 in the debit. The supplies will transfer to the balance sheet, and the supplies expense will transfer to the income statement. Depreciation on office equipment is estimated to be $300 per month. Here we have depreciation expense and accumulated depreciation. And the entry is debit depreciation expense, credit accumulated depreciation. And the influence, we have $300 as accumulated depreciation equipment in the credit side and $300 depreciation expense in the debit side. Accumulated depreciation had no balance before, so its new balance is $300 in the credit. It will be transferred to the balance sheet. And the depreciation expense has no balance before. Its new balance is $300 in the debit. It will be transferred to the income statement. Analysis reveals that Kawabata earned $1,200 of the services in September. Here we have to decrease unearned service revenue and increase service revenue. And the entry is debit unearned service revenue, credit service revenue for $1,200. The influence on adjustments, here we have unearned service revenue in the debit, and it had a credit balance before $1,600 minus $1,200, and the new balance is $400. The service revenue had a balance $5,000 before plus $1,200, and the new balance is $6,200. The unearned service revenue will transfer to the balance sheet, and the service revenue will transfer to the income statement. Here we have to complete adjusted trial balance. Let's begin with cash, the same balance, also the accounts receivable and the accounts payable, the owner's capital, rent expense, and office expense. The cash will transfer to the balance sheet, also accounts receivable, also supplies and equipment, accounts payable and unearned service revenue and owner's capital, all of them to the balance sheet. Service revenue, rent expense and office expense will transfer to the income statement. Also, the new accounts, we have salaries and wages payable to the balance sheet, accumulated depreciation equipment to the balance sheet, salaries and wages expense to the income statement, supplies expense to the income statement, and also depreciation expense to the income statement. After all of that, we have to sum debit and credit sides for adjusted trial balance and the income statement and the balance sheet. The difference between debit and the credit side in the income statement is the net income, also in the balance sheet. Now we have the adjusted trial balance. It's just copy and paste from the worksheet. And we have the income statement for the month of September. We have revenues less expenses, and the net income is $2,700. After the income statement, we will make the statement of owner's equity. We have owner's capital on September 1, add net income, less withdrawal by owner, and we have owner's capital on September 30 is $19,700. It will be transferred to the balance sheet, and we have in the balance sheet as of September 30 assets, cash, accounts receivable, supplies, equipment, less accumulated depreciation equipment, total assets $35,300. And we have liabilities and equity. Liabilities, accounts payable, salaries and wages payable, unearned service revenue. In the equity, we have owner's capital, and we have total liabilities and equity is $35,300. The last step is closing the books. Now we have to close all revenues and expenses in the income summary. And the first is debit service revenue, credit income summary. And then debit income summary, credit salaries and wages expense, rent expense, supplies expense, depreciation expense, and office expense. After closing the revenue and expenses in the income summary, we have to close the income summary in the owner's capital. And the entry is debit income summary, credit owner's capital. With this video, we have finished the accounting cycle. I hope that I have fulfilled what I presented to you. Goodbye with a new series to explain financial statements.